It is the morning of Wednesday, the 12th of August, 2026, and something genuinely unusual is unfolding across crypto markets. Bitcoin, the usual sun around which all other planets orbit, is slipping towards $63,700, down 0.25%. Yet the altcoin universe is lit up. Dogecoin has jumped almost 3% to just above 7 cents, and BNB has climbed 2% to $614. This is not random noise. It is a divergence that tells us exactly what sophisticated money is doing right now, and where the broader market is likely heading next. So what is behind this split? First, we have the US Consumer Price Index data landing later today. Historically, when traders expect softer inflation, they rotate into higher beta names, and in crypto land that often means Dogecoin. The meme coin is a pure liquidity play. Its nearly 3% bump in a single session is retail traders positioning for a risk-on shift. BNB, on the other hand, is riding a different wave. Over the past week, Binance Smart Chain activity has quietly picked up, with daily active addresses rising 8%. That utility demand is cushioning BNB, even as Bitcoin languishes. Meanwhile, Bitcoin itself has been pinned down by a chip stock sell-off and uncertainty around ETF flows, leaving it unable to reclaim the $64,000 level. The result is a rare day where the majors are being led not by the king, but by the court. From a chartist's perspective, Bitcoin is at a technical fork in the road. After failing to hold $64,000 as support, the price is now hovering right on the neckline of a developing head and shoulders pattern formed over the past 3 weeks. A daily close below $63,500 would confirm that pattern, potentially opening the door to a rapid retest of the $62,000 range. The bid has been thin, as yesterday's Bitcoin price lost $64K headline reminded us, and institutional traders, who now account for nearly 30% of spot volume according to on-chain data, have been net sellers during Asian hours. That institutional capitulation, even if mild, is why Bitcoin is slipping while altcoins like Dogecoin are finding a bid. It is a tale of two markets, retail optimism versus institutional caution. The immediate impact for everyday investors is a distorted market where picking your asset is everything. If you simply held a Bitcoin tracker this morning, you are flat or slightly in the red. But a portfolio weighted toward the altcoin leaders, particularly Doge and BNB, has notched gains. This dispersion is being amplified by a macro event still hours away, the US CPI print. Markets have priced in a 0.2% month-on-month rise in core inflation. A number that comes in below that, say 0.1%, would likely ignite a broad rally, with Bitcoin suddenly catching up to the altcoins. A hotter print, however, could crush the altcoin trade as quickly as it began, sending traders back to the relative safety of Bitcoin, or even out of crypto entirely. Looking ahead, the next 24 hours will be defined entirely by that CPI data. If inflation cools, expect Bitcoin to reclaim $64,500 rapidly, with Dogecoin potentially pushing towards 7.5 cents. But the real story might be BNB. A wave of new decentralized applications launching on the BNB chain in the first half of August could sustain its momentum even if broader markets wobble. The risk case is equally stark. A disappointing CPI figure would validate the bond market's recent hawkishness, push the dollar higher, and almost certainly send Bitcoin below 63,000, triggering the head and shoulders breakdown I mentioned. That would make altcoin profits very short-lived. Here is the single most important lesson from this quirky trading session. When Bitcoin stumbles and altcoins sprint, it usually signals a market that is positioning, not panicking. Today's divergence is a calculated bet on a friendly macro outcome. But that bet can turn on a pin. As an investor, watch the inflation number, watch Bitcoin's $63,500 line, and always remember that in crypto, the story can change between sips of your morning tea. For now, Dogecoin and BNB are the dogs wagging the tail.